Hey, welcome back. It's Jason Walter here. 40-year mortgages. This is yet another plan that was unveiled to help mitigate the number of foreclosures and keep people inside their houses. I'll share all the details with you in today's video. Also share an update regarding mortgage loan forbearances, interest rates, and much more. Let's go ahead and dive right in because I have a lot to share with you today. So Ginnie Mae recently announced the introduction of 40-year mortgages that will allow loan modifications for homeowners experiencing a financial hardship, which will ultimately allow them to lower their monthly mortgage payments. To give you a very brief background, the Government National Mortgage Association, or Ginnie Mae, is a government arm within the Department of Housing and Urban Development. It backs single-family and multifamily loans that are issued by government agencies such as VA loans, USDA loans, or FHA loans. In doing so, for the people who do get these types of loans, this lowers the financing costs to you, such as lowering the interest rate. Alright, so going back to this announcement of 40-year mortgages, Ginnie Mae stated the following in their press release. So Ginnie Mae has been integral to prevent foreclosure of homeowners experiencing financial hardship as a result of COVID-19. The challenges of last year require meaningful solutions to help keep people in their houses. As interest rates rise, this 40-year feature will enable more payment reduction options to help homeowners. Today's step by Ginnie Mae demonstrates a commitment to a more balanced and equitable housing finance system and demonstrates the critical role the agency plays in supporting government mortgage programs in the secondary market. Alright, so let me break this down for you. So if you are a homeowner and you have a USDA loan, FHA, or VA loan, and you are experiencing a financial hardship, you're having a hard time paying your bills, you can reach out to your loan servicer, which is a company you pay your mortgage payments to, and request a mortgage loan forbearance. When your forbearance of 12 to 18 months is over, you'll have to reach out to your loan servicer and discuss options about how to pay back all your missed mortgage payments. If you can no longer afford your regular monthly mortgage payments, then a possible option is to enter into a loan modification. In doing so, the term of your loan could be extended to up to 40 years, and your monthly payment would be reduced, making it more affordable. Now, please keep this in mind because this does not mean you can buy a house in the US with a 40-year loan. This recent announcement by Ginnie Mae only means that loan servicers of FHA, VA, or USDA loans can now offer a loan modification of up to 40 years if the homeowner is experiencing a financial hardship. It would also allow the ability to sell these loans on the secondary market as mortgage-backed securities. So big picture, what does this mean for you and I? What this basically means is that the government is doing everything that they can within their powers to avoid a foreclosure crisis. This also coincides with my video that I made last week about the extension of the eviction and foreclosure moratoriums until July 31st this year. In addition, the deadline to request an initial forbearance with those with an FHA, VA, or USDA loans has also been extended until September 30th this year. Meanwhile, to change gears slightly, the MBA, or the Mortgage Bankers Association, announced today that the share of loans in forbearance last week dropped to 3.91%. Now approximately 2 million homeowners are still in forbearance. The share of loans in forbearance also declined for the 17th straight week. According to the MBA, out of all the homeowners who have ended their forbearances so far, just over 50% either did a loan deferral or just continued to make their monthly mortgage payments while in forbearance, even though they didn't have to. 15% exited without a plan in place about how they are going to repay all their missed mortgage payments. That's a big no-no. Contact your loan servicer if you exit your loan forbearance. About 14% made a one-time lump sum payment of all their past due amounts, and then 10% did either a loan modification or trial loan modification, and 7.5% paid off their loan balances either through a refi or by selling their houses. To give you a quick mortgage interest rate update, rates on average held steady at 3.2% for a 30-year fixed-rate mortgage. Sam Cater, who's Freddie Mac's chief economist, stated the following: "As the economy progresses and inflation remains elevated, we expect that rates will continue to gradually rise in the second half of the year. For those homeowners who have not yet refinanced, now is the time." I agree with him somewhat here because I believe that interest rates will increase as well because they pretty much only have one direction to go, and that's pretty much up. However, refinancing is not for everyone, so I actually made a video about all the cons associated with doing a refi, and I'll leave a link below up here for you, and also a link in the video description below. Meanwhile, the price of lumber as a commodity increased almost 3% today to $800. This is down about 90% from the peak set in May this year, but it's still well above pre-pandemic levels when the price was in the 400s. In addition, the yield on the 10-year US Treasury note, which is tied loosely to mortgage interest rates, is still hovering at just under 1.5%. If you got any value out of this video whatsoever, then please hit the like button and also consider subscribing as well if you haven't done so already. I post videos about how this pandemic is affecting our housing market. You also can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day. Look forward to seeing you on the next video.